Welcome to NN Investment Partners. My name is Bregje Roosenboom and I'm Client Portfolio Manager for NNIP's Flexible Fixed Income Strategies. Today we would like to share with you some of our thoughts regarding fixed income market developments. On the back of central bank policies, we see historically low yields on government bonds, as well as a compression in liquidity and credit risk premiums. This changed the landscape for fixed income investors considerably, where they've been able to reap the benefits of a general decline in interest rates in recent years. Our solutions in this field involve more flexibility in managing interest rate and credit risk. And we have three live strategies at the moment, which are in the field of both absolute and total return.
At NN Investment Partners, we define an absolute return strategy as a strategy that produces positive, consistent performance over every 12-month rolling period. And with our absolute return bond strategy, we've done precisely that. The fund had very limited volatility over the past 5 years, 2 to 2.5%. So with our process and the current team that started managing the fund 5 years ago, we've produced a strong performance track record with limited volatility. We've been able to do so by breaking down the fund between over 3 components. The first component is the stable beta component. Here we invest in 0 to 3 year bonds that are rated BB or investment grade. The second component is the active beta component, where we make tactical asset allocations to various fixed income asset classes. The third component is an active, what we call the active alpha component. These are long-short positions where we take limited directional risk. Now, building on these 3 components, we've built our performance track record, but also, of course, building on the strength that we have in these various fixed income asset classes, where for each of them we have a strong team in place that also has a strong standalone performance track record. I think that in the current market environment, having a fund that can produce consistent positive performance in a variety of market conditions, including potential rise in interest rates, can be an interesting addition to your portfolio.
NN Global Bond Opportunities is a total return fixed income fund aiming to add 350 basis points per annum to a global fixed income index. We are an experienced, stable team with a strong and stable track record. In managing NN Global Bond Opportunities, we use a top-down approach, taking active positions in rates, FX and credits. On top of that, we have a strong focus on diversification. We take many different positions using different types of analysis, not relying on 1 or 2 big global themes. So our investment process, our investment style can be characterized as diversified and eclectic. Now, having good investment views is important, but limiting drawdown risk is as important. So therefore, in our portfolio construction process, risk budgeting and risk management really lie at the heart. On top of that, we have a very disciplined stop-loss process. On every trade, we have a stop-loss. If we hit that, we're out. That really helps to limit drawdown risk, the chances of drawdown risk in the portfolio. So we believe that NN Global Bond Opportunities is a very attractive proposition in a low-yield environment. Over a 3 to 5 year period, even in rising yields, we expect to deliver attractive returns.
The first-class yield opportunities fund is a multi-asset credit fund with a total return objective. We aim for a return of 4% over cash annualized over a full investment cycle. At the same time, we try to keep volatility limited within the 4 to 8% range. A diversified credit strategy that allocates to investment-grade corporate bonds, high-yield corporate bonds, emerging market debt, both local and hard currency, and truly diversified exposure. We really choose for spread allocation, and we try to limit interest rate exposure. And we do that by at least partially hedging the interest rate risk in the fund. It's a truly flexible fund and benchmark unaware, which means that we do not have to invest in those parts of the market that are deemed to be unattractive. And we really can focus the portfolio in those parts of credit markets where we see the most and attractive opportunities. We are able to manage this fund because we combine the macroeconomic views and the top-down asset allocation skills from the multi-asset boutique with the bottom-up skills from the investment specialty teams on credits and emerging market debt. I truly believe that a diversified credit strategy like the First Class Yield Opportunities Fund is very attractive for many investors in the current market environment, because many investors fear interest rate rises and at the same time are urgently looking for higher yields on their bond portfolio.